learning journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to take a look at the Treasury bonds and Treasury notes this morning. You'll notice here that we're completing this pattern right up here. We said it should get to around 122.27, and oh boy, they're really beating the stocks up now. Hold on, folks. I got to turn off something here. Otherwise, it's going to beep a long time. Just give me a second. I've got to hold on here. Just got to turn it off. That's all I got to do. Hold on just a minute. Okay, just a second here. All right, let me get back here and take care of this. All right, I think that's what I wanted to do. Okay, this stock's breaking down. It doesn't really mean much. We're below the 618. So anyway, let's get back to the Treasury bonds. So this is really a very beautiful pattern, folks. You got triple ABCDs, 1, 2, 3. You're setting right at the 786. If you go above 123, you're certainly wrong. But the last time we had a pattern that completed like this, it lasted several weeks. That means we would at least come down into this level right here, which gives you a very high risk-reward ratio. Now, if we look at the Treasury notes, which is, of course, the much larger open interest of the group, so just get that up right here, QRST there. That's it right here. You're going to be able to see what we did today. There is what we're watching. There are the Treasury notes. You can see it actually exceeded the target that we were looking for. I didn't do the smaller one like I did in the bonds. I don't know why I didn't do that. Let's do that right now, because that might be telling us that we're probably really close to Mother God and Country. Looks like about 10 pips. Because remember here, on the notes, we are above the 78% level in the notes by a substantial amount. The Treasury bonds, on the other hand, are below the 78% level of this high right back here. So they are the much weaker of the group. So that's where you want to sell the weakest and buy the strongest. That's what you're trying to do when you're looking at these things here today. Remember, the notes are related to car loans, mortgages, credit cards, stuff like that. The Treasury bonds are the long-term paper, 30 years or more. Actually, they call it 20 years or more, and that is the long-term Treasury bond. Both of them say, in God we trust. Okay, let's move on here and take a look here at the gold market. We had a beautiful setup here in gold that I pointed out in the video this morning. Hold on one second here. We want to get this 1 second as we look at this going. Where are we at here? Okay, hold on just a minute here. I got to get this 60-minute up. There's what I want to show you. Here's where we were last night. I sent this in a video. We were setting at the this is the December now. There was our low right back here. Okay, and this morning we were setting at a perfect 382 off of this high right here. That distance, you can see the 382, and if you drew it in, there's your low spot. There it is, comes in exactly right here, and it rallies up and makes a new high, and then it just gave up the ghost, and that's a bad sign. If you look at this on a shorter time frame, because remember, when something like that happens, you want to be able to see if you can find a place to do it. So you make a new high like we did here, and then just look, for that old, yes, Johnny, we see it, the first 382 retracement. And it took about, oh my God, Larry, it has taken about a half an hour, and it goes to the 50%. The difference here is only $2. So now we're starting, to move down even lower. So I hope that makes some sense to what we're paying attention to here with these markets that we're looking at. Now, we're having a little bit of a sell-off in the corn still. It's actually bouncing up a little bit. I wanted to show you it's just laying here. It's just not doing anything at all. And so, anything can happen from these levels, and it usually does. So let's remind ourselves of that as we're watching this unfold here this morning, okay? Okay, now let me double check here that I have to do a couple things here for housekeeping, and then we're going to get into some charts. Let's forget the housekeeping and take a look at Apple first, because we want to see if it's continuing to the downside like we thought it was going to last week. Get the daily up. Yeah. Oh, yeah. Now it was higher this morning at one time. Let's see what it rallied a little bit. Let's just for kicks and giggles, let's put the hourly up and see if that old high came in where we thought it might. Okay. Now, there it is, folks. There's your 382 on the whole range right there. I'll just draw it in. There's your high right back here. I'm just going to put that in here so we can see it really simple. There's your ABCD coming in. Spot on at the 382. It's down $5. This was as of yesterday, and then it gaps down today. So let's just try to refresh this, because it should be able to refresh. Yeah, there it was. There it was today, right at the 382. Opens higher. The numbers are 24. The high on the day was 24.84, and now we're $6 lower. That tells us that we're also heading down a little lower in these also. So let's remind ourselves of that, because these markets don't go straight up and don't go straight down. But when they do, they're telling us a story that we need to pay very, very close attention to. Now, let's take a look at the silver market, because it was not acting nearly as bullish as the gold market. We pointed this out in the video that we set last night. This is the range over the last few days. You can see it's been in a really strong downturn. Now, gold today, folks. Today, gold made a new all-time high at $2,505 in the December. Now, that is still a new high because it's been on the board long enough. So we went to about 24.60, I believe, in the August. But look at this. This has not made a 382 on anything. Let's just draw it in so you can see it, unless I missed that one. And I would not be surprised if I did. And I did. There it is right there yesterday, right at the exact 382. I pointed this out in the video, but I just didn't realize it until just now. That's what we were watching here, and it's broken, about 70 cents now in the silver, and actually almost made a double top here today. So let's see what the retracement level will tell us, where we might run into some support. And if you take the low to your high, we're at the 50% level now. This is most probably a logical area for support, is right here at the 61. But we don't have any ABCDs in here. So this is still continuing down until you get something that'll tell you, look what happened here. You don't want to get caught in something like that. A little bit lower here, that's the kind of market that you could be watching. All right? So let's remind ourselves of that. Okay, now let's move on. And we want to talk. We've got someone is ringing the bell. We've got somebody coming up, and it's our good friend Michael from Niagara Falls. What can we help you with, Michael?
Hi, Larry. Nice to hear your voice again. I was wondering if you could look at the iShares Israel ETF, ticker symbol EIS.
EIS?
Yeah, EIS.
F. Frank. Okay, EIF. I will do that. Stay tuned. We've got to pay a few bills. We'll be right back with Michael from Niagara Falls.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back speaking with Michael. Michael, this is IEF, is that correct?
No, it's E's in Edward, I's in Indigo, S is in Sam.
EIS?
Yeah.
That makes sense because that certainly doesn't look like a chart that I would consider as bearish. Hold on a second. EIS. Okay. Okay, get this up here. Take a quick look at this. All right. Give me a second here. Let's refresh this. Well, there's not enough data. Hold on. Risk maximum. Here we go. Yeah, this has just completed an ABCD up here. It looks like it's heading lower, and that's where it is. It's heading lower. So that is what we're...
Back to October 25th?
No. Well, no. This is October. That would be the 382 of the whole range. You'll see there's where you'd most probably go would be around 57. That's only down about 5% from where we are right now. But it just completed a perfect butterfly pattern. There's your XABCD making a new high. Everything lined up perfectly, and now we're backing off sharply with gaps down. So you'd think after a run like this, you're going to get at least this, and probably between 57 and 55. So 55 takes you down 10%. So you want to be watching for that.
What would trigger a free fall back to the October lows?
One big gap down, like this one over here in October of last year, where it looked like it was going to be really good, and then the next day it gapped down, and that's what triggers those, is when it catches everybody by surprise.
So in general, do you think maybe we could see a replay of August 2015 in the S&P?
August 2015.
That was the height of the Athens riots when Greece...
I don't know. That's
and
so
the
far
S&P
over my.
fell. It was a free fall in 4 days, 20% decline in 4 days.
That's also possible, but Michael, that's way beyond my pay grade, pal. I don't think that way.
Okay.
I think in how much you have to risk to see if you're right. But you're correct. This is the kind of chart that if it's going to happen, it's got three things. It's got the completion here of the butterfly. You've got a gap down here, a big gap. Okay, that's about a 3% gap. You'd have another gap down today. So are they still fighting over there? Did they make peace, or what's the story? I don't even know.
The Canadian government just ordered all so-called Canadians to leave Lebanon because there is a pending conflict between Hezbollah and Israel.
Mm-hmm. Okay, well, I have to cancel my trip to Tel Aviv and also to Beirut. I've been to Beirut, and it is a beautiful city. I don't know if you folks listening.
What are you doing there?
Oh, I was there in 1982 doing some work for a bank. I took a week off to go over there. Yeah, I was kidnapped, but they let me go after a week. They realized they couldn't afford to feed me, so I got free food from the kidnappers, and so they had to let me go. I was eating too much, so they let me go. Mike, you keep your sense of humor, okay, buddy? And call us again. Okay, folks, let's move on to the next one here. And we want to cover the British pound here, folks. We had a request here today, and I wanted to go through the British pound again because it's setting at major support here today, folks, on the British pound. We were bearish this just about 10 days ago. There it is right now, still moving a little bit lower, but we're below the 618 now, this last move right here. But we've been down now for 10 days, which is equal to the move that we had here that was down for 10 days. The difference is this was a big top up in here, folks. A, B, C, D up in here, just like this was a top. But look how this one's coming down faster. See, it should have stopped. If it were doing the exact same thing, it should have stopped way up here, but it didn't. Now we got somebody else calling in. Oh, my goodness, what's going on? Jim from Palm Harbor. What can we do for you, Jim?
Larry, I missed your birthday last week. Mine was July 13th, and I think you had a birthday, and I don't know if you celebrate those or you just...
I give
my
them...
mom's got a trick, though. What you do is you reverse the numbers. So if someone happens to be 75, they're only 57.
Well, I did that to Arch when he was 57. But no, actually, I give my birthdays away every year to people that are 20 that want to start drinking a year early. And so that it seems to be working out okay. You want to ask a question?
I wanted to look at that SPY chart with you because
we
broke the 786, at least from where I'm looking at. And I looked at a little ABC down to maybe 535.
Oh, we could easily do that. Just a second here. Yep, 535 looks like a pretty good one. What this is, what's interesting is the fact that we've given up this much so fast today. You see, this is what's so troubling, which tells you that the ABCD on this, Jim, easily will take you down to this level right up in here, 527. So I think that's the area you want to be watching. And if you look at this from the low that we made way back here in April, that's going to come spot in at the right at the 50% level. You see how the 382 stopped it here? Then we had a really strong 2-day rally thanks to the Fed, and now we're breaking down more. So
now I guess you constantly go from a 4-minute to an 8-minute to a 30 to see where we are. Is that?
Yeah. Basically, I'm starting here with the daily, and then if I want to go down to a smaller time frame, the first one I'll look at is usually an 8-minute, and that tells me this was the gap up and then the gap down. And you can see here that it just doesn't have any friends yet, but it will. I mean, it's not going to go straight down. It'll have some bounces in here, would be my guess, but we'll see.
Well, I only show a high trend today, 1.67, so that there's really no panic out there, and they still haven't. The max low I've got on the tick is minus 1,004. So we're just sitting and waiting for all that end of month, beginning of month mutual fund money to come rolling in here.
And it'll probably coming in. Starts today and tomorrow, and it usually does. So why shouldn't it? They're giving prices away at a cheaper price than they were yesterday. You can't ask for anything better than that.
Now, if I wanted to flip and go long,
you have to call somebody else.
I mean, somewhere would you wait for a 382 and see that
yes.
it did bounce 382 and then go? Or
yeah, right here. Watch it 527. That's down quite a bit now. But remember, this is the biggest correction we've had during this whole thing since last April. Look at this. This is the biggest correction, and it's twice as much or 3 times as much as anything. It's telling you something big is happening. There's been a change in economic thought, so you got to be careful. Okay.
Yep, and and one last thing. Where do you usually see a trend on when the margin calls usually come in? Is that after 2 o'clock, between 2 and 2:30, or later?
The only time I ever look at those is if it's something that's a big surprise. And Rich Anderson, he gets that data, and he alerts me, hey, look what's happened to either credit card defaults, auto loan defaults, something like that, where it might be an outlier event. And believe me, I don't factor it into the trade. I just look at the patterns because you can't. You can't second guess these guys with these reports and stuff, but I do watch what they're doing because it gives you some idea where we are. So you stick with us, buddy. We'll see you again soon,
if
okay?
You have time to look at wheat, and have a great day, Larry.
Wheat, I won't have time, but I'm going to do it now while we're watching, okay?
Thank you.
Be right back. Okay.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, I believe we have Stan Harley in the house. Stan, how are you doing, my friend?
Hello, Larry. I'm doing just awesome. I understand you were doing some exceptional poker playing last night.
I got a chance to play for a little while, and I did make a couple of bucks. Not enough to buy a good steak, but a small hamburger, yes, it was okay. I did have a lot of fun, but I had lost all the power here yesterday, so we really had to go and stay someplace last night. So we stayed at the nearby casino to get a good rate just to take a break. But we've lost electricity so many times up in this area here the last 2 weeks because of the storms we've had. I've had roof damage and doors blown open and stuff. It's been tough. Nobody cares about that, Stan. They want to know what's going to happen in the market. So let's get with it, buddy. What do you see?
Well, let's see if maybe we can explore some of those things.
Well, we certainly have volatility, aren't we?
We are indeed. Just kind of as a backdrop here, I'm trained as an aerospace engineer, so I think of the markets as an engineer would. Early on in my engineering career, we studied kinematics, which is the movement of objects with respect to time. And I do the exact same process with the markets. I analyze price with respect to time, irrespective of the force behind that movement. Whether it's the Fed or the political landscape, it doesn't matter to me. I just want to analyze price versus time. If I can do that, if I can model it, maybe I can make some reasonable projections about what's going to happen in the future. My theory, my working theory continues. I'm looking for a major market top in about 3 months' time here. Let's take a look at the monthly chart going back about 125 years. And this is a log chart of the Dow Industrials. And what I've done here is I have marked the major pivot points, the highs, and a couple of the lows from 1929 to the present. And what is interesting, Larry, is every single one of them can be defined by the Lucas series of numbers. I know some people look at Fibonacci, and I do look at Fibonacci relationships. I find the Fibonacci ratios, to be exceptionally powerful in their utility. But more importantly, I find the Lucas number series and their ×2 and ×4 multiples to be exceptionally powerful in defining market movements, whether we're talking about stocks, bonds, metals, casino games, unemployment data. It matters not. This seems to be a universal constant across all things. Take a look at the chart here. I won't go through all the pivot points here, but all of the major pivot points can be defined by the Lucas series or their ×2 multiple. For example, from September 3rd, 1929 into the January 1973 major market peak, that was within 1 month of being exactly a Lucas number 521 months. And then the peak we saw in 2000 was within 2 months of being a Lucas number 322, and so forth. And so should the pattern continue, the next clustering occurs in the November-December 2024 time period. Well, this is August.
Wow.
Let's take a look at the weekly data.
Okay.
I do the exact same thing with the weekly data. And what I've done in the upper left-hand corner up here is I put a shortened version of my Lucas table. The first column are the Lucas numbers. The second column, I have multiplied those numbers by 2. And take note of all of the highs that have occurred since the March 2000 high. Every single one, without exception, all can be defined by this column right here, the Lucas numbers multiplied by 2. So for example, from the March 2000 high to the October 2007 high, that was within 4 weeks of being exactly Lucas 199 times 2, which is 398. The pattern continued in the next peak in May of 2015. Then in February of 2020, we were within 2 weeks of 246, which happens to be Lucas 123 times 2, and so on. And so should the pattern continue, and it may not, but assuming that it does, and it's been a very reliable pattern, but assuming that it does, the data would suggest we should be looking to the second week in November of 2024, which could be a very, very important market peak. Do we have anything going on the second week of November 2024?
Not this year, but there's probably something going on in the UK. I'll check on that.
Thank you. Please get back to me.
There might be something on TV about it, but if I find out anything, I'll let you know, okay?
Okay, yeah, thank you. I'll be checking back in with you on that one.
Okay. What's the next one we have?
Well, let's distill this down and take a look at a shorter time span. Again, staying with the weekly data on the S&P 500. And I know you had some callers just a few minutes ago before I came on the air with you that were asking about the market and so forth and the war over in the Mideast. And again, I'm a practitioner of market kinematics. I don't care about the forces that drive prices either up or down. I just want to look at a price chart. All right, here is a weekly chart. I ran this off just moments before we came on the air here, going back to 2019. And what I've done with vertical lines is I've marked all of the major lows, and I call these the primary cycle low in the stock market. That's a term that I borrowed from Walter Bresser.
Walter Bresser, that's what I thought. Yes. So, yeah.
Although I differ with him on the cyclical structure, but I like his term, and so I incorporate that in my work. Well, take a look at this closely and see, without crunching any numbers, if your eye can pick up anything. Look at this, 31, 18, 31, 20, 33, 22, 32, 25. Do you see a pattern?
Sure do. Boy.
Yes, there is a pattern. And I can tell you it's 21 weeks to 31.5 weeks. And what I've done here, I just put the data into a spreadsheet, and wow, lo and behold, we've got a perfect pattern of 2 to 3, 3 to 2, or 1 to 1.5, depending on which number you put in the numerator or the denominator. And we have a pristine pattern of 1 to 1.5, 1 to 1.5. And it's a little variable. That's why I do a statistical analysis of the data. And it tells me the dominant cycle is 21 weeks, Fibonacci 21, and 1.5 multiple of that, which is 31.5. And in the limited data we had, it came out to be 31.6. But basically, it's 31.5 over the long haul. That's what the data series data series reflects. Isn't that interesting?
Wow. Yeah, it sure is.
And we're getting a sell-off. I hear the music.
We got to pay a few bills, my friend. So stay with us. Stan Harley, be right back with us, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, with our good friend Stan Harley. Please continue, my friend.
Absolutely. It just occurred to me while we were on break, Walter Brezert, when he talked about the primary cycle in his book, seems like it's been a while since I've looked at that book, but I think he did refer to that primary cycle as being in the 20 to 22 week range, which is exactly what my research shows, about 20 weeks. And then it's 1.5 multiple of that, which is 31.5.
Yeah.
Here's my regression analysis of the day, and I get 21 weeks, so that's right in what he was. What I recall he said the primary cycle was, but there tends to be a variability, I have found, a 3 to 2 or 2 to 3 type relationship between alternating periods in the stock market. The next one is due without any variance at all around 1 November. However, I noticed the pattern of expansion and contraction, and I also look at the daily data, and I believe that the low is actually going to occur in the middle of October.
Wow.
We're not there yet, but let's drill this down to the daily chart and see if we can make some better sense of what's going on near term. Here's a chart of the Dow Industrials that I ran off just a little while ago, and I've drawn a horizontal line there, just shy of 40,000. That's a price level. I won't go into the math, but I do a lot of number crunching to come up with that. That was overhead resistance for the Dow. And what we have occurring right now is your classic technical breakout followed by a retest. So we broke out above that 39,843 level, popped up to just slightly north of 41,000. And then we tested it once. I think we're going to test it again. We're going to do we got a little more floor mopping to do over the next few days. But I think this will be over and done with in about a week's time, and we'll be set to move higher from there.
Okay.
Let's look at the S&P 500. Slightly different pattern from the Dow. What is interesting is the two advances that took place off the 2023 bottom. The first one topped out in late March, And as you can see, I've drawn with my purple line a trend line or Gann angle. It's about 1 by 1. And just by clicking copy paste, I produced a parallel line, put it over here, and interestingly enough, off the April 19th primary cycle low, the market has advanced at exactly the same slope. Exactly.
Wow.
In the past primary cycle, which went from October of 2023 into April of this year, we had 3 trading cycles. That was a 21-week cycle. The current one is going to be an expanded one, so I'm looking for 4 trading cycles. And we are in the process of making the trough in the second one right now. And I believe we have a few more days to go, and we're going to be down in this region where my cursor is. We could take those lows out by a smidgy-widgy, but a buying opportunity, in my opinion.
Okay.
One more thing, take note. Note the structure that occurred back here last year. We had a primary cycle high that occurred on July 27th, 2023. A couple of days later, on August 1st, the Dow peaked out. And then we went down approximately 68 trading days. I say 68 because it's Fibonacci 34 times 2. We bottomed in October. I believe we are undergoing virtually the same structure right now. So look at this structure, and I think a fairly similar pattern will evolve. Just basically take these dates from 2023, subtract 2 weeks, and you've essentially got the pattern that I believe is going to evolve in 2024. So where we peaked out here on July 27th, in the present time frame, we peaked out on July 16th. So, and looking for a bottom, this bottom occurred October 27th. I'm looking for the next low around October 18th. So again, take the 2023 pattern, subtract 2 weeks, and I think you'll roughly get what's happening right in the present.
Wow. Do great work, Stan. I'll tell you. You know, one of the reasons I moved to Tucson was because Walt was living here. And, of course, we had worked on cycles together. And when I was at Drexel, and, of course, when I wanted to come here, I had a cousin here, and Walt was here. So this is how I got here. It's been here ever since, 33 years.
Some great talent residing in the Tucson area. Yourself.
Wow. Bob Miner lived here. Arts Crawford lived here. Yeah.
Arts Crawford. Yes. Some exceptional talent in that area.
Hold on, Stan. I think we have a caller. Jeff has got a question for you. Go ahead, Jeff. Please ask Stan your question.
Thank you, Larry. Hi, Stan. I wanted to ask, what do you think will happen after your projected November high in the S&P 500? Well, I mean, obviously it's going to go down, but I mean, like a little more color.
Well, I think it's going to be a secular market peak. How far down, I don't know. From 2000 to 2002, and again from 2007 to 2009, both of those declines were fairly severe. We saw both the Dow and the S&P decline by more than 60%. I would anticipate something similar.
Okay, that's what I was looking for. Thank you. I appreciate it. Thank you.
Thank you very much. I think it's going to be a major market peak that could last for a number of years.
Wow. Okay. So I'm hearing probably on the order of 60% over maybe 18 months, couple years, something like that.
Perhaps. Let's wait till see if we get that high, and then we can start talking about when it comes after that. But I think some serious problems loom on the horizon. I'll put it that way. Here's a daily chart of the S&P going back to 2021, and
thank you, bud.
Notice significant highs have been coming in at 80 trading day intervals. And with my cycles template here, these lines, these vertical lines, are drawn at 80 trading day intervals, and look at that. You can see the highs that come in, 80 plus or minus about 3 or 4 days. And then below that is my regression analysis of the exact dates. I put them into the spreadsheet, and I think we just lost Jeff. Done the calculation, and it comes out to be 80 trading days, as you can see right here. And the standard deviation on that is 3.29 trading days, and the R squared is 9999. That is 1.0 would be a perfect fit to the data. That is very close to being perfect. I did this analysis several months ago, and my analysis pointed to a high in the vicinity of July 18th, standard deviation of 3 trading days. The S&P topped on July 16. The Dow peaked on July 18.
I remember those days because you were here telling us at the time it was happening. It was an amazing call. Yeah, and you did a great job.
And should the pattern continue, the subsequent high is due in the vicinity of November 8th.
Stan, thanks for joining us, buddy. We'll have you on again soon, and God bless. We love having you, buddy.
Bye-bye.
Stan Harley, the Harley Stock Market Cycles, folks. Let's be right back with you in just a few moments.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks. I just wanted to mention the Dow futures were down 700 just a moment ago. We're starting to get a little bit of a rally in here. We did have a rally a little while ago. The Dow rallied 120 points. We went from 40,481 up to 40,623. So any movement off the bottom here, let's just draw it in here because we had a low here coming in here at 58. And if you had 150 that, it should get all the way up to 405 would be the place where one would expect there might be some things coming in. They're going to ask why I don't have any charts. And the answer to that is I can't get this thing to work right now. and we've only got a minute to go, so bear with me, Al. I'm very sorry, but I can't move this thing around fast enough to get the chart up. But I'm just saying to you, the last time we had a rally, which was back here 2 hours ago, the Dow rallied 150 points. And if that's the case, we should rally up to just about 4005 and take a look at that one, because that would be an equal rally in a very, very strong trending market to the downside. So those are just a few of the things we're watching here today. So make sure you keep an eye on these things, because the markets have a tendency to drop faster than they go up, and they went down pretty fast. They went up pretty fast, so you got to expect something like that to happen at any particular time. We've gone to 41,400 yesterday, folks, to 40,400 today. That's a 1,000 point move in the old Dow Jones, NASDAQ, or Dow Jones, which is worth $5,000 if you were fortunate enough to jump on board today. So anyway, so live every day in an attitude of gratitude, and may God bless. Tomorrow we're going to have Norm Winsky as our guest. On Monday, we hope to have Grace Morris from Astro Economics. Okay, so live every day in an attitude of gratitude, and may God bless, and we'll see you on the flip side tomorrow, folks.